Hi everyone, today I'm going to review my positions from the 17th of March. Apologies that I haven't been posting for the last few weeks. We had some technical difficulties with the recording software, but that has been resolved now, so I'll try to catch up. So let's get right to the review. We are essentially trying to beat SPY with selling additional covered calls. So I have 100 shares of SPY and I sell one covered call at a time. We started the campaign on the 31st of January, and the goal is to get additional 6 to 10% on top of the SPY returns in the next 11 months. So let's see if we can do it. So far, the campaign started on the 31st. I bought 100 shares of SPY and sold one covered calls at 413, and that expired in February, and finally I waited a couple days and then sold to open another call at strike price of 410 and closed that last week. And even though it was expiring on the 17th, I closed it like 1 week earlier because of uh, getting more time value decay from the call that is expiring on the 24th. So right now we have the call, a short call expiring next week, right? And the strike price is 407. And I wanted to see if the decision that I made was the right one, namely that I rolled the call to 1 week later expiration, essentially a week before it expired, right? So we got 59 cents when I made the trade. So the 410 call expiring March 23rd was trading around here, 13, 14 cents. And the call that I rolled into, the 407, was trading around 71 cents, 72 cents. So as I said, we were able to get 59 cents credit. And if I rolled into a call expiring even 1 week later, so 31st of March, I would be able to get another 44 cents. That means another $44. But I didn't do it, right? So I'm just checking, kind of doubting myself if I did the right thing or verifying that I did the right thing. So at the end of Friday, at the close, and the difference was just 44 cents. So we started with 59 cents credit, and if I waited another hour or so, then it would be only 44 cents. So far so good. Monday, SPY went up a little bit, but not enough to give us more credit. So still good that we rolled it on Friday. Tuesday, I believe, SPY went up even more, and now the credit is slightly more than what we got before. And then again, SPY went down on Wednesday. So again, a confirmation that we did the right thing. And on Thursday, the market, and that means SPY as well, went up quite a bit. It went from 389 something to 396 something. So almost 2% up. And you can see now the delta is 85 cents. So because of that, I mean, I would have been better off waiting till Thursday to do the roll. But at the same time, 2% move in SPY is very unusual. So I cannot, I cannot wait for it to happen. Most likely it would not happen. So anyway, now the credit would be 85 cents or $85. Okay. So, and finally on Friday, SPY went back down, and the credit, had I waited, if I did the roll on Friday 17th, I would get only 34 cents. So it was a good decision, other than the Thursday blip where SPY went up significantly. It was a good decision that we rolled the call earlier to the later expiration. So anyway, so we have now the 24th of March call, strike price 407, and we need to decide whether to roll it again or if we should stay. right? So we can see that the price of the call, when I was looking at it, SPY was around 390. It was somewhere between 38, 39 cents. And I wanted to roll it to just the next week or 1 week later expiration. I want to just keep the same strike price. And the question is, should I roll or should I stay? And you can see the delta already, the theta already is bigger for the call that expires in 2 weeks, right? So compared to this, only 11 cents. And as the time progresses, the difference will be even bigger. So I decided to roll again. So what did I do? So extended the expiration by 1 week only. Instead of March 24th, expiring March 31st, I kept the same strike price and I got the 63 cents credit for each contract, which means our account got $62 and a change after all the commissions. So here's the detailed breakdown at the bottom here, right? I got credit of 101 from selling the call, and I had to buy the old call back, so I spent $39 on that. And then whatever money I had left, I again invested in Rhythm. So now we rolled the call expiring 24th of March into a call expiring 31st of March and got some additional credit for that. So what are all the trades so far? So we started here, right? And sold some call, covered it back, or they expired again, sold another call, covered it back, sold another call. And this week, so we covered the 407 call and sell short the 407 call expiring in 2 weeks, so 31st of March. And this is the cash that we got from selling all the calls so far. So this is the position. SPY, it's not doing great, but it's losing 4% or less than 4%, and I'm sure it'll pick up soon because the tightening of the rates, interest rates, should be done soon. So the Federal Reserve should stop raising rates soon, and once that happens, the market will go up. The Starwood and Rhythm positions are not doing that well. They are both losing quite a bit, and that's because of the banking crisis. And these stocks, there are real estate trusts, but they also have some financial components. So they are part of some financial ETFs, and because people are selling anything financial, essentially these stocks get sold off as well. But I am fully expecting for them to come back up soon. Okay, how did the market do? Well, SPY right now is in this kind of intermediate downtrend, right? You can see, so these are the blue lines, the cyan, are kind of the strike prices for our calls. So this was 410 this was 413, the next one was 410, and now the next one is 407. These orange lines represent where we initiated a new position. This week, we made the trade when SPY was around 390. So I'm marking this on the chart this way. And when we look back for the whole year, it'll be very clear what the strike prices were and where we made our trades. This is the detailed breakdown day by day. I'm skipping the first few weeks, and because I cannot fit all the data here, you can look at the older recordings to see the old data. And really the thing that I care about is this column. That's essentially the profit from the short calls. And so far we've made about 1.5%, almost, well, 1.75%, let's say, on our initial investment. Right, we started with less than $40,000, and we already making $680 mid-March. So that's pretty good. This is more interesting, or this is better to see. The yellow is the profit, or at the beginning losses from selling the covered calls. The blues That's the SPY. And you can see SPY, the market has not been doing too well lately. So we have some losses from SPY. And if we combine the profits from selling the covered calls and the losses from SPY, it's actually not that bad. So I think we are losing roughly 2% right now. And as I said, SPY will go up soon, I hope. So plans for next week, just monitor the position. If it's at the money or close to being at the money, then I'll wait 1 week to expiration. But if it's out of the money, I will most likely roll it for the next week, extend the expiration again by 1 week to get more of the time decay. The worst thing that could happen is if SPY jumps up a lot, right? So if that would make our option in the money, and in that case, I will need to decide what to do depending how much in the money it is. I may either wait 1 more week or roll it to some at the money option with later expiration. That's all for today. Thank you for watching. If you like our presentation, please give us a like at the bottom and subscribe to our channel. There is many more presentations like these coming up. I also have presentations for our option school where I explain more about the time value and time value decay. Until next time, happy trading.